things off, our second mock debate, where returning champion Marco Lim will defend his title against incumbents Axion and IDEG. Now, ladies and gentlemen, given the meltdown in the last 48 hours, I really appreciate everyone's time showing up this morning, this evening. The cause of the risk-off sentiment, it's not only caused by risk-off sentiment in equities, but also a collapse of the $40 billion Luna Terra and its stablecoin UST. So is this the Lehman Brothers moment that fleshes out institutional interests alongside retail investors, or is it a warning shot that Wall Street whales are just getting started? Special thanks to Matrix Port and Trident Trust for co-hosting the event tonight with us. And to kick things off, please welcome Mr. Sean Green of Trident Trust. Sean?
Good morning, Alvin. How are you?
I'm good. That's more than I can say about my portfolio, I'll have to say. But,
well, I heard the rumor on the street was you started the run on Luna.
Was
heard. That's the rumor I heard.
Yeah. I think we're missing a few zeros off from the artillery to make that short play.
Well, yeah, I'm really looking forward to the debate today, especially the first question or resolution around stablecoins. That should be a bit of a humdinger, really.
Absolutely.
So what I'll do then is we'll jump straight into this. I'll introduce the teams. So in the green corner, we have Marco Lim, the reigning defending champion of the OPIM debate session. Marco is the, good morning, Marco. How are you?
Oh, sorry. Did I come up earlier again?
No, that's okay. That's okay. Marco is the managing partner of MaiCapital. He has 14 years of experience, so overseeing electronic sales and trading operations in institutional fixed income, commodities, currencies with major financial institutions. He's also the head of fund manager of the Blockchain Opportunity Fund and the fund manager for the Bitcoin Plus investment fund. Thank you for coming back and defending your title, Marco.
Thank you, Sean, for having me, and Nelson for having me today.
No problem. And joining him today is Teong. Teong is the founding partner of Satori Research. Teong used to be the manager of a profitable digital asset unit of SBI Holdings Japan, focusing on cryptocurrency market making and trading. Teong has 17 years experience in trading and portfolio management, and was head of a group managing over $6 billion for the CIO of JP Morgan for 7 years. Welcome, Teong. I hope everything's well with you.
Good morning, Sean. No, I'm not really well. I mean, I think none of us today panelists have enough sleep given the meltdown in the markets, but we persevere.
You're looking good there. You're looking good. You don't look very tired at all.
Well, coffee. This is my third coffee for the morning.
It's worth it. You must be making some money from the market.
Well, at least we're not long Luna or USC. But...
Well, that's always a bonus over the last 48 hours, that's for sure. So I'd like to introduce the team that you'll be up against. We have Anthony from Axion Global Asset Management. Anthony's one of the original Hong Kong OGs of Bitcoin and Ethereum. Prior to joining Axiom, he co-founded Orchio Partners in 2017, where he was responsible for leading and directing the team managing an array of digital assets, proprietary portfolios, and doing market research, testing data findings, and designing in-house portfolio systems. He also worked at JP Morgan for 10 years as well. Good morning. How are you, Anthony?
Morning. Thanks for having me. Please don't call me an OG. I'm barely an OG. Started off in 2017, but I always just tell myself we're just the graduating class of the bear market 2018. And then, we're just joking around with everyone. We will be the graduating class of 2022 bear market soon. So
indeed. You could tell your grandkids you were there when the Luna crash happened.
Oh yeah, I'll definitely not name my newborn Luna.
No, and no tattoos. No Luna tattoos either. and joining Anthony today in what will be the red corner to start off with is Markus. Markus has 17 years experience in portfolio management. Before joining IDEG, Markus was the head of proprietary trading, including cryptocurrency at KGI Asia. Prior to that, he was the chief investment officer at German Investment Management. And before that, Markus was also at Millennium Capital Partners. Good morning, Markus. How are you? Did you get any sleep last night?
Yeah, I slept like a baby, so.
Well, you're either a man of steel or no Luna positions, I guess. But just for the audience, what will happen is we'll have 4 debate topics. Each team will have a 2-minute 30 opening resolution and a 1-minute 30 rebuttal. The team with the green background is defending the resolution, and the team with the red background is going to argue against the resolution. What we'll do is we'll put up a poll before each resolution, and we'll see what the audience thinks. And then after the debate is finished, or each topic's debate is finished, we will then go into another poll and see if anybody's managed to change the audience mind. And the one with the biggest change is the winner. And like we say, given that Marco is the reigning champion, his team will go first. So can you please kindly put the poll up for the audience to vote on, please? So the first one is, be it resolved that UST depeg calls for a fully regulated stablecoin. What's the opinion of the audience there? We'll give you probably another 10 seconds to vote on that. Given what happened in the market over the last 48 hours, this should be a bit of a humdinger as well. Okay, can you now close the poll? And can we see the result? Okay, it's pretty close. It's pretty close. It's pretty close. This should be an interesting contest. So, Marco, from your team, who's going first?
Teong is going.
Okay, Thielen. Okay, guys, can you just put up the countdown clock? You'll see a countdown clock of 10 seconds. Once it hits that 10 seconds, you'll have 2 minutes 30, and use your time wisely. Can we put up the countdown clock now, please? There we go. Oh, it's already started. So, Thielen, maybe you want to go ahead and start now.
Ladies and gentlemen, in the last few days, we've experienced one of the most spectacular sell-off in the crypto markets. Over the weekend, the USD stablecoin depegged, sending a cascade of sell-offs across the board. Billions of dollars of investor money were wiped out. This USD depeg highlights the need for a regulated stablecoin. In contrast with the rest of the crypto market, stablecoins grew by 13% in the first quarter of 2022. Stablecoins grew as investors de-risked in the midst of geopolitical and macroeconomic uncertainties. If you look at the chart over here, we've got the biggest 5 stablecoins are Tether, USDC, Binance Dollars, DAI, and also UST. These 5 stablecoins make up about 80% of the market share, with a total value of approximately $170 billion. Ladies and gentlemen, UST, which is the stable coin that imploded this week, is only the 4th biggest market cap coin in the system. It is only the 4th biggest coin. And when it depegged, the market reaction was overwhelming. So imagine if a bigger stable coin like the USDC, or God forbid, Tether should go down, the impact would have been even more profound. As the stablecoin market grows, regulators are necessary to ensure financial stability and sufficient investor protection. On March 2022, President Biden signed an EO, an executive order ordering key federal agents to coordinate regulation to protect investors. Regulators in various jurisdictions are already regulating cryptocurrencies, and in the US, you have the SEC and the CFTC who are overseeing portions of the crypto market. Stablecoin, by natural extension, should also be regulated. Ergo, the explosive growth of stablecoins and the cryptocurrency market as an asset class, plus the need to ensure financial stability and investor protection, means we need a regulated stablecoin. So Sean, so that's 2.5 minutes, right?
Yes, that's 2.5 minutes. Perfect. Thank you very much, Thielen. So who is going to go first for the red team?
That'll be me.
Okay, brilliant. Can we have the timer starting now?
Oh, okay, cool. Good morning, ladies and gentlemen. Again, thank you so much for having me here today. Today, our opening statement will be arguing against the need for a regulated stable coin in this market. And also, before I do again, I really appreciate the Thielen and Markus team for the opening statement. No, mine will be less formal, if you don't mind. First of all, like I want to go back to what happened with the events that happened overnight. It's definitely very, very unfortunate that a lot of people in funds, retail, and who got basically wiped out, with their savings and so forth. At the same time, one thing that we do want to bring back the fact that crypto started off as a unregulated market. How we got here today, why there is so much attention and, FOMO with what the title of this market, of this debate today is because of how all these developments led up to where we are today. Without the freedom, flexibility to do whatever, crypto is doing today, we wouldn't have, this market where we have this debate today. And if there's the need for any regulated stablecoin, the government is already doing something which is called CDBC. So, which leads to the fact that there's a reason why we have so many different stablecoins. And there's also a reason why there's so much opportunity out there in this market today is because all these stablecoins are unregulated. All these stablecoins have its own unique features where all the yield comes from. That's where all the opportunity comes from. That's where all the FOMO comes into play. And of course, not saying the fact that like the designs are perfect and so forth, but that's kind of where all the financial innovation and where all the attention could come into play, where we really believe that having a regulated stablecoin market would really draw innovation, and it will weed out a lot of people who wants to get into this market, and we'll have a very hard time of accessing this market once it's regulated. Thank you.
Thank you very much, Anthony. Thank you. I think you made some very valid points there as well, especially around how crypto was started in the first place. Marco, are you taking the rebuttal, or is that Teong?
I will be taking the rebuttal. Thanks, Anthony and Teong, for the opening. I guess I want to go back to the points that we want to point out. We don't want to regulate all stablecoin. It means that we think our standpoint is there should be one stablecoin that is regulated. We need to go back to look back why there's creations for stablecoin in the market in the first place. So the stablecoins come up because it was very inconvenient to transfer money from one place to another in the crypto world with a stable currency. That's where I think the stable coins come out. When tethers come out, people don't have to take the fiat back into their bank, easier for transfer. I think when the market grow bigger, as Teong pointed out, I think the risk get bigger. The UST, we have to go back to today's title, where the tether USD is actually shown as a big risk in the market, that if one of the stable coin isn't regulated, then there might be a big blow up, right? When the pie get bigger, and the risk to the whole M2, which will be much impactful to the whole financial market. And the financial and the regulators' main concern is to really bring financial stabilities to the market, right? So if they don't have at least one stable coin that is fully regulated, that will be very difficult. For instance, like us as asset management firms, we wanted to go in the stablecoin space, but we want to pick a stablecoin that is somewhat more regulated. So as of example, we are now more lean towards using USDC rather than USDT. We're not saying we're banning the rest of the stablecoin and every stablecoin to be regulated. We're just saying that if the government were to regulate at least one stablecoin or endorse one stablecoin, like where they are now going towards for USDC, that will actually be very helpful to the market to actually go that more exponentially, so institutional like us or people who are listening can actually use a more legit US stablecoin, right? Instead of more algorithm stablecoin, which is not really tested in the market. So we think, going back to the point, we wanted more offerings. And we're not saying that we should stop innovations in algo stablecoin. We're just saying that if there's a bigger anchor in the market, which is a government endorsed stablecoin, that will actually help bring more institutional money into the market, which will actually drive the crypto market into a bigger space as well. And that's where we actually going for it. And if we look at it, as Teong also pointed out, the regulators already regulating crypto. It's not like they're not regulating cryptos. We see that they're exponentially. Whether now they are going to lay their hands on there, we think that stablecoin is next where they're pointing to. We see that from the SEC.
Marco, I'm going to have to jump in there. I think the bell,
I couldn't hear
the bell. No, that's okay. I think none of us could, but yeah, we went a little over the 1 minute 30 bell. Thank you very much. Thank you. Markus, are you taking the rebuttal, or is that okay? Over to you. Thank you very much.
Take it. So I think of course, we are in general in favor of regulation, because as Marco pointed out, in general, regulation supports the big institutions to come in because they need like a better level playing field. But I think, as Anthony correctly said, that the crypto market actually so far has worked pretty well without regulation. And regulation usually is backward looking, it's slow, and the market can just regulate itself, right? I mean, other stable coins. I mean, you look at USDC, which is like properly collateralized. When you look at even Tether is collateralized, it seems it has reached some kind of, I guess, sizable stability. I think here the Luna UST saga is more a matter of where the protocol went rogue, right? I mean, they tried to drain the liquidity from the pool number 3, and there was some imbalance suddenly in the market, and people took advantage of it and drained basically more liquidity from it until people have trust, right? So I think it's really like stablecoin is all about trust. It's all about properly collateralized, and that's kind of like what in this case with Luna, what they really failed to do. And I think that's when the market just traded against it. So I don't think this is like a bigger event for other stable coins. I think this is a one-off, and I think the market's going to move on from that and can survive without regulation.
Perfect timing, Markus. Brilliant.
Well, it's not the time one. So
thank you very much. Great guy. Great backwards and forwards on those arguments. Let's see. Let's put up the poll. Can we put up the poll results just to remind everyone what the result was before the first debate? So that was before. Can we now put up the poll again to let everybody vote after that great debate? Can we put up the poll again, please? And let's give everyone 10 or 15 seconds to vote.
Can we vote too?
Can we now close the poll? Alvin? Oh, so then, oh, wow. The results are up 68 to 32. So there definitely was a swing there in favor of regulation. Very surprising. What are you thinking there, Alvin?
Yeah, that's pretty. In fact, there's one question earlier about whether or not CBDC should be integrated into stable coins. If anything, I'm getting the sense that the regulators are going to take this collapse of Luna at least as an excuse to start regulation.
Yeah.
And something that another friend of mine pointed out earlier was, well, the Hong Kong US dollar peg was attacked back in the 90s, and that's a regulated currency. Asian financial crisis had plenty of regulated currencies. Did that stop an attack on pegs? I don't think it did. So yeah, I'm interested to see where this narrative takes, if anything.
Wow. So to more regulation, people are actually interested.
Now,
Very interested.
Sorry, can I ask if we're open for debate now, or if you don't mind me asking, in terms of, are we moving on to the next topic?
Yeah.
Moving on.
No, we'll move on. We'll move on.
And it is trying to turn around the poll.
Yeah. Well, I kind of a doubt is the reason why, like, choosing a regular. But
You had your 2 minutes. You had your 2 minutes.
it was just an opening statement. Come on.
Well, I mean, you should. If you have any friends that you want to phone up to come and vote for you as well, feel free to do so. So let's put up the second debate topic, please. So this one is again very topical around NFTs. Be it resolved that NFT adoption as an asset class exceeds that of crypto and should be considered by institutions. So let's just leave that poll up there for 10 or 15 seconds. I know. I think everyone here on the panel as well has some involvement in NFTs, whether it's personal or on the company. So this should be another interesting take. So can we close the poll now and then put up the results? Wow. Okay. Interesting.
But I like NFTs. I like my apes.
What about the eggs?
We shall not talk about the eggs or the penguins yet.
Penguins, yeah. Okay. So let's start. Teong, Marco, who's going first from your team?
I am.
Okay. So Marco. So you're 1-0 up as well.
Yeah, I'm not going to pull my pop now. I'm going to pull it later. But I think thanks Alvin last time for winning the debate, they actually have airdropped me a NFT, which is a nice car with OPIM logo on it. So we are one of the institute that we got airdrop free NFT from Alvin as well. So I think looking at this topic, people should not think of NFT as only an investment vehicle. I think if the people who are in the pool who just voted for not touching NFT, I think it's because people were seeing, oh, there's 99% scam or 90% very high ratio in a scam. But if we look at it as a financial value, yes, that might be. But if we look at it today, debate we should focus on is actually the value, the utility value outside of the financial value or the issue face value of the NFT. I think a lot of people have the misconception is, oh, I'm buying the JPEG. Why is that JPEG of a ape is more successful than a penguin that other people have bought? Why the ape prices? I think you don't look at NFT as a JPEG or anything. If you look at it as a utility, if you look at what values the ape have bought, then you simply understand why there's a big, I'm going to share the screen. Can you guys all see it? The screen?
Yep, you look good.
Yeah. So if you look at my share screen on the ape, then you understand that a lot of these institutional like Nikes or Adidas who come into the play of NFT is not to seek value on buying the NFT for it to go up 100 times to make money from it. They coming from the angle of really to have a market design, trying to build the community around it and try to really have more marketing effects. So I will have to argue that NFT actually bring more market or a community building effects than just an investment financial product. Look at it that way, then I mean, the argument is already there that we have HSBC, JP Morgan, everyone, Visa as well, HSBC who bought Virtual Land, MTR as well. They're all already in. And if you look across the NASDAQ as well, there's already 10 companies or listed on NASDAQ who already have possession of NFT, including eBay as well. So they're already allowing customers to buy and sell NFT through their eBay platform. So if we look at that, then
Thank you, Markus. Thank you very much.
Difference. Thank you, guys.
Thank you. Very, very well thought out there. From the red corner, who is going to go first? Okay, Markus. So your time starts now.
Okay. I mean, of course, there's a lot of interest among NFTs, and we have also like an NFT fund that we actively trade. So we know the interest from investors. But I think as an asset class that you just expect to grow exponentially, I think it's a little bit tough to argue. The number one reason I think is because it's not really clear that NFTs are cutting into the kind of traditional finance area. And I think this is the biggest argument, of course, for crypto, right? Taking out the middleman instead of like trying to really come up with a completely new business model or new asset class. So we think basically investing around the infrastructure of NFTs is probably like a better proposition than the NFTs itself. And when you look at, for example, the last 1 week, right, the floor price of the top 100 projects has gone down by almost like 47%. I mean, that's just like a sign it's a lot of uncertainty. It's too expensive. I mean, the argument, of course, that all these banks and companies have some small shop in the metaverse and issuing there some projects. I mean, these are kind of like marketing side projects, but not really like a new asset class. And of course, the risk is, as we saw with the Azuki NFTs, that actually the creators are abandoning these projects. So there's not like a long life proposition that, for example, like the Bored Apes were offering, right? I think Azuki was down 70% or something. And some other statistics that Crypto Slam, which was quoted by Bloomberg, actually was saying that out of $18 billion of volume in supposedly highly liquid NFTs, 95% was just wash trading. And I think this is like the biggest risk for the market, that there's too much scam. And I think the debate here is really around institutional adoption. And I think it's going to be very tough to see when you don't have like a market that is liquidity, a market that is really not very right? We saw, for example, like CryptoPunk 998. I think it was sold for like more than $500 million, but the guy just sold it to himself, right? Just for this like market news. And also Coinbase, they have 4 million people on their waiting list for their NFT beta projects, but there was only like 70K transacted in the first day, and I think 700K in the first 3 weeks. So the interest is not really there, I think. So, and it's not cutting into the pie of traditional finance.
Thank you, Markus. Thank you. There's some good heavy blows there landed.
That was spicy.
Oh, yeah, that's going to be a tough one to defend.
That was spicy.
So Teong, are you taking the rebuttal on that one?
Well, I definitely have to take that, because the very moment Markus mentioned Azuki, that drove a stake in my heart, right?
Exactly.
So
Yes.
I was
Take it on. Yeah.
I was the early beams, and I think Markus definitely did it on purpose, driving that into my heart. So, well, definitely was painful. We understand that. Just look at Just look at the markets, any markets at the embryonic stage. Thanks, Marco. At the embryonic stage of any markets, there will be a lot of volatility. There will be a lot of scams. That's part and parcel of the market. And Marcus, you just got quite angry now. The thing is that, forgive me. Okay, so I'll just bring it back to institutions, right? So when we are talking about NFTs for institutions, we're not just talking about for financial institutions. We're talking for various institutions, including like companies that make merchandise like Adidas, like Nike, etc. Right? So these institutions, the way that they need to communicate with their consumers, right? In the old days, you can basically send them like brochures. Then you proceed to email, and then you start with different things. But nowadays, the way that you can communicate more effectively with the consumers is perhaps you airdrop into their MetaMask wallet. Perhaps you get them involved in ticketing. You get them involved in getting more engaged by purchasing. Like, for example, one case of example is the Adidas ape, right? So in December, they issued this NFTs. And then once you purchase it,
well, I'm going to have to cut you off there. We've run out of time for that one, Teong. Sorry, but
we'll take this outside later, Marcus.
I'll see you downstairs.
There was some good heavy blows coming back there from Teong after Team One were on the ropes there. Anthony, are you taking the rebuttal?
Yeah, sure.
Okay, brilliant. Your time starts now.
Cool. No, thank you. Very interesting debate so far. And Marcus, I obviously and Teong, I feel you for obviously buy these NFTs and Azukis, and obviously with what's going on with the NFT market. If you think that like Luna and UST is volatile enough, then you should probably know that like NFTs are even more volatile due to the lack of liquidity. You and I, we all worked in TradFi before. These I would call it like even less liquid than like what we have in like say junk bonds or even any type of traditional asset class that has illiquid markets, right? So, and whatever you just said, right? No, in terms of being institutionalized, with the Adidas NFT and like buying sandbox, whatever, none of this has to do with institutionalization, but I think just as a means of what you mentioned, how do you kind of create community? So there is really no need for NFTs to be institutionalized. It already works as it is if you believe that NFT is the future and so forth. And by basically your argument, essentially you're just saying that like Ferraris or watches or just art should also be institutionalized, which to me makes zero sense. So I'm going to end at that.
Oh, ouch. A good low blow landed at the end there.
Flip that one. It makes no sense.
Can we bring up the poll before? Just to remind everybody of the original poll. So I think it was pretty clear. Most people were against. And then let's let people vote again. Oh, but it seems to be spicing up nicely.
Yeah, the incumbents are warming up. The contenders are warming up.
I think we all used to work at JP Morgan, actually, right? We work at JP Morgan.
So we put the poll down. Let's see. Oh, it's got even wider. Yeah. Oh, yeah. Wow. Things have definitely heated up here. It's 1-1.
It's 1-0.
1-1.
Your pride is
play
on
for.
the line, Marco. Your pride is on the line.
Marco, the title. How are you going to recover from that one?
They're coming for the belt.
So guys, I think now can you change your screens from green to red and red to green, please? Teong, if you could change to red as well. Just for the audience panel, green is the team that is defending the resolution and red is against the resolution. Can we put up the third resolution, please? With everything to play for. Crypto winter will last as long as the Fed says so. As long as there's quantitative tightening. So let's see what people think about that and how much influence the Fed has over crypto prices. I mean, what are we going to do if it's a draw?
I still have my JPEGs.
Maybe they all get eggs. Okay, can we take that poll down? Let's see what people think of the Fed. Oh wow, that's pretty close. That's pretty close.
Yeah. Or
Okay.
against.
Yeah, that's pretty close. This
There's
should
still
make
some
for
true believers out there, it looks like.
Okay, let's take this one down. Markus, Anthony, who will be going first on your team? Okay,
I'll do first.
your time start now.
Okay, so overall, of course, we are all kind of quite constructive on crypto, but never about digital assets, better said. But I think there is an opportunity cost of not being invested from really like a knowledge, from really like a capital allocation exposure, lowering your volatility of your portfolio, and you talk from multi-asset portfolios. And when we run some like Black Litterman multi-asset simulation, basically, this is where you can put in crypto and other assets. You should have around like 9% based on our analysis in crypto. So of course, everybody suffers in this environment right now. And the main argument here is, of course, that the Fed has printed around like 40% of all the US dollars over the last 2 years. And now we're going through like a quantitative tightening period. And of course, this kind of like reverses everything a little bit, right? I mean, Bitcoin was trading at like just 4,000 at the COVID crash, and we are like in multiples above it. And I think the main argument, of course, is that the Fed has determined, the Fed worked very closely, of course, with the Treasury, with the president in the US for the midterm elections that we're seeing in November, that inflation is the number one issue for the election. And when you look back that a year ago, we even talked about oil prices being negative, at least the front months was trading negative. But oil prices have been gradually rising from like $40 US a year ago to around 100 now. So basically, there will be this constant pressure on higher interest rates these days, and I think that's going to put a damper really on the crypto market. And I think that's what we're seeing quite clearly. And also because the crypto market is not just like a retail market anymore; it has diversified into institutional investors, so they depend on the overall portfolio exposure, and they need to cut all kind of like corners, right? And I mean, crypto is still outperforming, I think, the kind of like small cap tech stocks. And I think there is some decorrelation happening, but overall the correlation is extremely high. And when you argue that the Nasdaq right now depends on the Fed's, I guess, policy, then you also have to argue that the crypto depends on the Fed's policy, right? But I would argue there is a way to trade this through RVs, through more active trading, and that's kind of like how I would argue. But again, the market has changed from just retail to institutional investors, and they're based the decision on Fed's policy.
Thank you very much, Markus. Made some very, 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 very good points there. Marco, Teong, who's taking the opening statements? Okay, Teong, your time starts now.
So guys, Markus, I'm not going to lie. We know that Fed's action, whether it's easing or tightening, will definitely impact every nook and cranny of every financial markets in the world, right? So you, myself, and I know most of the panelists here, we have traded macro instruments for many years. And the mantra, don't fight the Feds, is deeply tattooed perhaps in our cranium. However, the key question today here is, will crypto winter last as long as quantitative tightening? And the answer is a resounding no. Let me share a screen. Cryptocurrencies as an asset class, we can actually agree here today is that it's still at a relatively low market cap, right? It was 1.5 trillion yesterday, and today is about 1.4 trillion. If we compare that with global equities or global bonds or even gold market, it is only a very tiny fraction of the constellation of assets that investors can invest in. So with its at infancy stage, there's still a lot of money waiting anxiously on the sidelines to diversify into crypto, which, let me remind you guys today, the topic our debate is Insto Fomo. So I believe that once market stabilizes, the crypto markets will recover faster and much stronger from the rest of the asset classes. Institutions, as we know, are hiring aggressively and growing rapidly in the crypto space. If you check the LinkedIn job postings, crypto-related job postings clocked a 395% increase last year in 2021, whereas tech-related job postings was only about 100%. Ergo, the combination of low market cap and crypto being accepted as an asset class and institutions waiting to FOMO into this asset class means that crypto spring will come much earlier before any other TradFi asset classes.
Very much. And love the slides. Thank you for that. Anthony, I guess you'll be taking the rebuttal on this.
Sure.
Okay, your
I guess
time
I-
starts now.
Cool. Thank you, Teong, for the open statement. I don't even know why we're arguing about this. This is such a no-brainer argument where, and Teong, you work in I would say a quantitative type of trading firm in crypto. We all look at things statistically, right? Just Google anything, the correlation of crypto with the equities market, and just look at the number. Because I don't need a slide, I can tell you right now. Actually, like from the kind of low time frame to high time frame correlation, talking about 30-day, 90-day, 180-day, it's all basically like trending up right now. Like its correlation against S&P is actually at 0.8. So if you're telling me that the Fed is not affecting crypto markets, you're pretty much lying to my face right now. And as you probably know right now, everything depends on where the interest rate is right now. Like, obviously why we're dumping apart from all the Luna crash is because the Fed is tightening. There is expectations of multiple 50 basis point rate hikes. So, or to argue that there is where the market will decouple from where the Fed is saying, it's basically saying that there will be no institutional adoption in crypto, which again defeats the purpose of why we're here today. So I don't really have any much to say, but just look at statistics. So that's all I have to say. Thanks.
Thank you, Anthony. You're really warming up to this contest, I see.
And just as a warning to our and just as a disclaimer, the views expressed in this mock debate are not necessarily those of the participants themselves or the firms that they represent. This is all for fun and simply to highlight different sides of the coin for some of these important topics. So yeah. Thank you, everyone.
Yeah,
And
good
also,
highlight,
and also, which team pulled the shortest straw?
Yeah, it's true. Yeah.
So, Marco, you taking this? You guys are on the ropes
taking
here.
this. I'm
Okay,
taking
you need to come out swinging. Let's have the timer start now.
Yeah, I just want to rebut on Anthony, right? Today, we just need to prove that crypto winter or crypto market is not 100% dependent on the Fed fund rate. I think, yes, somewhat we have to agree that somewhat it is impacted by the Fed fund rate, but the winter or summer doesn't matter. I think the cycle of crypto is not dependent by the Fed. Okay, it's affected by the Fed, but it's not independent. I'll show you guys on the chat. You guys want the full numbers, right? Then I'll just full numbers to show you guys on the chart here. You see, right, for the last cycle of the Fed funds rate from 18 to 2020, there was tapering already from 0.5 all the way back, all the way up to 2.5 after they've done some easing again. But during that time, if you look at the Bitcoin pricing, right, it's continued to go up. If no correlations whatsoever to it. And if you look at the chart on May 4th, right, just earlier, a few days earlier in the hike, when Fed funds hiked to 1%, crypto actually went out that day instead of going down. So that the correlations, crypto to Fed, is not 100%. Yes, someone is impactful, but then as Teong argued, I think it's institutional still rushing in. That's why we are still here talking about this debate, because they will be coming in and that will not be
Thank you, Marco. Thank you. Wow, you made some very good valid points there. I think you really want to defend that title.
But Marco, back then inflation was 2% and now it's 8%, right? So it's very difficult to compare it, right? Especially if investors have underinvested in inflation protecting assets, right? Which I think they kind of start to accumulate now, right? That's why you see all this money goes into energy suddenly.
Yeah, but Markus, back then, nobody was looking at crypto markets, crypto assets as an investable asset class, but right now they are, and it's still very small, less than 1% of the overall investable assets. So I think the situation has changed.
Yeah,
Look,
that's why they can take
swinging
profit in
after the
crypto
bell
now, right? They can take profit in crypto now and buy energy stocks, right? Just to rebalance their portfolios, right? Because the debate is about institutions coming.
So Markus, are you taking your tracker fund out and buying crypto and buying energy, right? So you're in crypto fund. Anthony, if you're not taking, I'm not taking money out to buy energy, right? I'm not buying.
I'm not, but like,
right?
there's definitely some swinging after the bell here.
I'm definitely putting my money in stables right now. Like we see, like
much higher. No, forget it.
yeah, but
my fund.
Okay, guys. Okay.
My name. Not
But Marco, you can
Yeah.
insult Marcus, you can insult his family, but don't insult his firm. Marcus is very loyal to his firm. And I knew
And as Teong said, these are like debates, right? Or as Alvin said, we have the short stick sometimes for these arguments. So,
Okay, I thank you for that. And I can see you both really want to win this. This is definitely spicing up quite a bit there, don't you think?
Sandy, could you put up the poll? I'm curious to see where this one's gone.
Yeah, this should be interesting.
So after the debate, ladies and gentlemen, how do you feel? Will the crypto winter last as long as the Fed says so? For or against? After what you've heard from our very heated debate today. This is a tough one because yeah.
Oh,
Wow.
wow.
59% against. It will not. So it's actually become, more convinced that crypto will not last as long as the Fed says so.
Very interesting.
So what's the tally up for the score?
So it's 2-1 now to Marco. And
okay, here we go. Here's the fourth and last resolution.
so Marco, all on the line here for you. Asian regulators' slow adoption of crypto results in the long-term damage to local competitiveness. Alvin, I think we need to do something if there's a draw, maybe a sudden death.
This is one I'm wondering if SFC is listening in.
Wow.
Look at that. Asian regulators slow 4. So we have a tough fight ahead, guys. 82% feel that Asian regulators' slow adoption of crypto is in fact creating long-term damage to local competitiveness. We might have a biased audience. I don't know.
A lot of work to be done.
A lot of work to do. All right.
Okay, Anthony, Marcus, who's going first?
Let me go.
Okay, brilliant.
I can start, right? Okay, cool. Okay, just disclaimer. If SSC is listening to this, these are just my personal opinions. By no means represent the firm or whatever. Well, I think it's arguing this, given obviously the poll results, it's quite evident that regulators do have an impact in this market. And I think the biggest case that we can make is over the years, when we started kind of crypto back in 2017, obviously Marco and Thielen, Markus, and we all started roughly at the same time as well too. We saw there was a huge growth explosion of crypto firms, coming out of Hong Kong. And then over the years, what do we see? We have pretty much one of the biggest firms, FTX, and also I think Binance was here for quite some time as well too, basically leaving Hong Kong for other parts of the world. And obviously FTX went to Bahamas, Binance, first up to Singapore, then went to I think Europe and I believe in France and Dubai. There is obviously a lot of concern, I'm not going to lie, from regulators, because they want to protect the investors, protect retail in terms of not getting hurt from the market, which is what you're seeing today. But you can't lie that a lot of firms are actually leaving Hong Kong to set up shop elsewhere because of there's a lot of kind of tightening control in what you can do and what you can't do in Hong Kong with regards to crypto. Again, I don't want to throw shade, but if you look at the past few years now, look how many Type 7 companies or Type 7 is exchange licenses in Hong Kong were granted. I think one was granted obviously to OSL. Another one I think was granted, was Hashi, I believe. And you compare those volumes against all the global exchange volumes that you see other exchanges and so forth. So it is quite evident. You can't deny the fact that the regulators do slow down the adoption and institutionalization of crypto here, especially in Hong Kong.
Thank you, Anthony. Some very valid points there. Marco, Teong, who's going first? Marco. Okay.
Go first. I think
take some swings.
Anthony has boxed himself out into just Hong Kong, right? I think Asia is much bigger than just Hong Kong itself. I think I'm going to show you guys some of the data here that you guys can see. So if you guys can see from this graph, right? Asia is so big. I know talk about China and the crypto, but Hong Kong is still a testing ground. I mean, this chart ratio, Anthony, your firm name is on there as well. Axion Capital, myself as well, got SFC approval this year, just now for managing digital assets, right? I mean, besides HashKey itself, this year, I think the regulator have now, if you compare slow adoptions, I think now they're much faster adopting because they have a higher standards, right? Regulators always have a higher standards in Asia to protect investors. And as you see on my PowerPoint, myself, Anthony firms got the approval from SEC to manage 100% of crypto. That shows that regulators already now more opening up compared to 2 years ago where they have less understanding of how the crypto market works. Another thing I want to point out is Australia actually launched their first ETF. In the States, SEC, right, they only approved a non-spot Bitcoin ETF, which is still a futures ETF, where now Asia is taking the lead where we have a spot ETF in Australia that was listed, I think today that they're going to list. So if you look at these news that is coming out, I want to take a view that Asia regulators actually not slow compared to the rest of the world, SEC or Europe that we're behind. If you look at the chart there, Australia is quite friendly. Thailand, they have their regulation. DBS got approved in Singapore to run the exchange. So I think Asia comparatively is not really slowing compared to the rest of the world. If you look at FTX, when Sam announced they're leaving Hong Kong, it's not because of the regulation that they're leaving Hong Kong, it's because of COVID that they have to be quarantined 21 days that they're leaving Hong Kong. So I think it's partially FTX leaving Hong Kong is not because of the regulations, it's because of the fact. So,
Thanks, Marco.
to say Asia is still the place to be.
Thank you, Marco. Thank you. Interesting spin on FTX. Okay. So, Markus, you have 90 seconds to rebut.
The debate really is about competitiveness here, right? And that's always about relative comparison. And the whole point is that we all want that, of course, Asia does really well, be it Hong Kong, be it Singapore. We all kind of licensed in these areas. And we just wish there is a little bit, I think, faster adoption. And I think we're working all with the regulator to help bring this forward, right? But I think at the same time, FTX leaving Hong Kong is not necessarily to do with COVID. It's because they see the US as a much bigger market, but also really a market where I think they see more adoption, right? We had like Biden's executive order, Treasury Secretary Yellen, she changed her view from a year ago. All the sponsorship deals that you see there in the US. I mean, there is just like so much more lobbying happening in these areas. And in Hong Kong, we really don't see this to that extent. On the other side, for example, Germany also has clarified on some tax holdings. I mean, you don't need to pay taxes if you hold BTC or Ethereum for over a year, even if you stake it. They have offered now to retail investors, 400 saving banks with access to 50 million retail investors. So in Hong Kong, it's still a little bit opaque how much money you have you need to be like a qualified investor really to hold it. And I think that's a little bit where we wish there would be a little bit more drive.
Thank you, Markus. Thank you. So, Teong, I think it's over to you, and it's all on the line here.
I know, but the thing is, this topic of regulation, Marco is the king. He's the king of regulations in Hong Kong. Marco, you take this part.
Yeah.
Defending champion.
I think, to be fair, I think Asia regulators done a lot of work on that. We have been communicating with not only SFC, but, as well. We think that regulators in Asia have a higher standards, right? I mean, it's not fair to talk about FTX moving to closer to the state. It's not because of regulations. So we're talking about regulations today is because that capital market is just bigger, right? Tech stock moving to US is not because Hong Kong regulations is any worse. It's just that money have been pulling in. Same thing as because of strong US dollars, right? Why people are buying US dollars, not because they're better regulators, just because it is a stronger currency now at this humble environment. So we will have to argue that Asia regulator actually put a lot of work into retaining or trying to get these firms to be properly licensed in Asia. And I think we are working towards that for Japan, Korea. If you look at not only China, right, outside of Asia, we have Japan that is doing quite well. They have 20 over license for crypto exchange. We have Korea that done so well in licensing as well. We have Indonesia, so you already approved a few exchange licenses. Also Thailand as well, they have a few exchange licenses. So I think Asia regulators actually welcome because those are the guys that want a more friendly environment to welcome these guys to come back to help their capital.
Thank you very much.
Can I just ask one question for Marco? Actually, I saw FTX 2 weeks ago in the Bahamas. So you're saying when Hong Kong gets rid of the quarantine rule, FTX is going to come back?
No, if the capital, if what I'm saying, the argument point is not only because of COVID regulations, it's because the capital market in US is just bigger, right? It's just same thing why Tesla is not listed in Hong Kong, listed in US, or why some of the firms are now rushing to list on SPAC in US, not in Hong Kong. It's not because of regulations, right? I think it's because the capital market, the money pool is in US. When the money pool come back to Southeast Asia or the whole Asia, I think some of these firms will move their headquarters back in. That's where the money is, right? I think it's has something to do with regulations, but it's not fully to do with regulations on that sense.
Big decisions are always made around regulations.
Markus,
This is maybe not for a small firm like MaiCapital, but big firms,
Oh, God. Markus, you unleashed here.
You just stop your exit from FTX buying you up, right? FTX come back and buy IDEG. You should deny the call offer and say, I'm not letting you buy. You're not coming back to buy. Well, I welcome them. Why not? If they want to come back anytime, we should be welcoming them. I mean, money shift around, and I think firm move around. If one day they want to come back, if the market grows, we welcome them by any time.
All right, guys, thank you. Okay, brilliant. So let's put the poll up before, just to remind people what it was pretty unanimous before. So then let's put the poll up again and let's see. Marco, you really need this one. It's 2-1 to
I think
Markus and
the
Anthony.
participant here wanted more regulations because now then they can trade crypto. So they should be for, not against it.
Your title's on the line here. Let's go to the judges. Can we close the poll and pop it up? So pretty much the same. There was a slight change, but I think it's pretty convincing there that people want regulation, or Asian regulators are slow. It is actually affecting the long-term damage to local competition. So we have a winner, 3-1, a very convincing winner to Markus and
No,
it's
It's a tie.
Oh no, sorry. Yes, sorry.
It's a tie.
Hi. Yes.
It's a tie.
No.
Mind taking it.
Sorry. Wow. What are we going to do here, Alvin, on a tie?
I think we need a rematch, guys. I think we have to do a rematch in a few months if everyone's up for it. Yeah.
Yep, of course.
We'll be in the pit of crypto win. I think we're already in the pit of crypto winner by then.
And now the next time there's no gloves.
No gloves. No, that's right.
Markus took his gloves off first, right?
Yeah, he did. There are no gloves.
Well, I think, Teong, when you had your opening statement, you talked so much about gentlemen, right? I mean, there's no gentlemen in crypto. So.
This is a den of
Because
thieves.
that's how we were trained in JP Morgan and Goldman Sachs, to be gentlemen, to kowtow to the rules, all the regulations.
All right, gentlemen, thank you very much for your time. Really appreciate it. We put in some good work here. To our audience members, I hope you enjoyed it. This is a live and interactive event, and really glad to have you all out to participate. I'm going to let the guys log off. Thank you very much, gentlemen, and we'll see you in a few months for the rematch, and we'll start lining up the card then.